Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, having had a bit of a lull, I suppose, for the portfolio over the last couple of months, you've had a stonking good trade in the last week or so. It was a long position that you took in BHP Billiton, and tell us how it's worked out.
Yeah, I'm delighted that it's worked out very well for us, and we've taken profits on the trade. And you're right, it's after a week period of, well, when I say a week period, it was just a lethargic period for our portfolio where we hadn't really seen much movement on the portfolio for around about 2 months. And last week I said it's getting a bit tired. We need to shake things up a bit. So we cut a couple of trades. And we put this BHP Billiton trade on, and it's worked out very nicely. So if we have a quick look at what we did for the portfolio, you can see the chart of BHP Billiton up on the screen over there now. And it's got a nice sort of basing feel to it as things stand at the moment. This was your 50-day moving average, this light blue line, and you can see that's beginning to flatten out. Now, I always take that as a good read of the medium-term momentum. 50 days is approximately 2.5 months worth of trading action. So it gives you a good feel. And something I've always found is just a good filter to use is to try and align your trades with the direction of the 50-day moving average. So if the 50-day moving average is pointing up, then you're safe to go long, generally. If it's pointing down, then rather don't go long. You might even possibly be considering going short. Okay. And that's because it's telling you what the direction of that medium-term momentum is. Now, in this case, we've seen the 50-day moving average flattening out as indicated here. And you can see the stock price rallied well above the 50-day moving average and then pulled back to retest that 50-day moving average where it found a bit of support. Now, other interesting things that I like the look of here, one was that there was this double bottom that happened at around about 203 Rand per share, and that was the lows in August and the lows in late September, and we saw the share price bouncing up above that. And strictly speaking, when you can validate a double bottom, it's actually when you take out that middle point there that I'm indicating. Once you take out that middle area, then you can actually safely say, well, now that is a double bottom. So in other words, when it broke above there, we could then start saying, okay, well, this probably is a double bottom. Look to buy the next pullback.
And when you talk about take out, you mean the highest point that it makes subsequent to that double bottom is a higher high?
Yeah, in other words, this high in October is higher than those previous highs in September. Okay. So you've got the double bottom over there, and now once you start taking out the sort of the middle of September high there, you can then start saying, okay, this actually does look like a double bottom now. Look to potentially then buy the next pullback. And that's exactly what we did for the portfolio. We went along and we bought, last week we bought 500 CFDs for the portfolio at 219 Rand and 80 cents. And we put a stop loss at 213, and we were looking for a move up to 240, which is essentially saying that we're looking for a move up towards this lateral line over here. Now that lateral line comes in at about 244 actually, but I didn't want to be too greedy, so I decided to just put our profit-taking level in a little bit earlier. And we'll see what happens. Just in terms of other things that we spotted, in terms of why I like the look of this trade. Notice that I've got Fibonacci retracement lines over here. Now, the way those work is I've actually taken the move from the middle, from the low at the end of September. You take that rally from there and you take it all the way to the recent high, which was in early October. You then measure the distance of that pullback. And what we found was that this pullback was exactly 61.8% of that rally. And now that is, this area between the 50% and the 61.8% retracement, we often refer to that as the ambush zone. In other words, that's the area where we would expect buyers to potentially come in and start to mop up the sellers. And the fact that we got a nice bullish reversal candle in that area, that was actually what we call a hammer candle. We got a nice bullish reversal off that area, off the 61.8% retracement, etc., etc. To me, this all stacked up very, very nicely for a long trade.
Because someone actually did send us a tweet saying, how did you call that, before it actually started happening? So that candle, did that emerge on the charts before you entered the trade, if I remember correctly?
Yes. Remember last week on the show, I actually showed an hourly graph of BHP Billiton. This is a daily graph, so every one of those candles is 1 day. I actually drilled down into an hourly graph, and then I could see on an intraday basis that there was buying activity happening around about that 220 sort of area. And that's when I decided that's time to get long. I didn't wait for the daily reversal here. I actually looked,
Okay.
I based my trade off of an hourly reversal.
And I suppose you were helped by that Chinese interest rate cuts.
Yeah, certainly that did help, and we saw markets globally taking a bit of a leg up following that. So that was also definitely helpful for us. Although that did come after we had entered the trade already. But yes, it certainly did help. And we like any little bit of help that we can get. Sometimes, I've said it before on this show, sometimes you do need a little bit of luck in this game.
Sure.
And we've had our odd little bit of bad luck as well as good luck. So, sometimes a bit of good luck is most welcome.
So where did you eventually close it out, Garth?
Well, my intention was to sell it at 240 Rand, and that I actually left a sell order in the market yesterday at 240 Rand to bank that profit. And it traded whilst I was out during the day. That meant we made 9,580 Rand on that trade, which is nice. It adds about 2.7% to the value of our portfolio, which is great. You string a couple of those together and you start making decent money.
Yeah, and luckily yesterday, because today the commodity stocks have started coming off quite heavily.
Yeah,
so
they have again.
As you say, there's always a bit of an element of luck to this game. Yeah. Okay, guys, so that was BHP Billiton, which out of which you've made a profit. What about Zeder? Because you do still seem to be holding on to that trade. Is it starting to do what you wanted to?
It is. It's taking its time for sure, but it is doing what we wanted it to. And I'll explain again. I know we've been in this trade now for around about a month, so it is getting a bit long in the tooth, but it is working nevertheless, which is a good sign. So there's the graph of Zeder over the last year or so. And what's evident are these inflection points. You've got 7 Rand at the bottom there, 8 Rand, where you can see a bunch of inflection points, both highs and lows, and then 9 Rand, which was a series of highs through the middle of this year. Now, the price moved down towards the 7 Rand area and actually went a little bit below, and then it reversed up nicely from there. And I decided at that stage to go long. We bought 13,000 CFDs for our portfolio at 7 Rand 35. And the stop loss at 6 Rand 95, and I was looking for a move up to between 8 Rand to 8 Rand 50. And certainly it's working out for us. You can see what I quite like here is this formation of what looks like a little inverted head and shoulders there. And if you, strictly speaking, if you were to draw a neckline through that pattern and project that head upwards, it gives you a move up to about 850, 870, that sort of area. So I think for the moment I'm going to just hang in here and stay with the trade. It is making us money at the moment. There is recently a series of higher highs and higher lows. Another reason why I did this trade, and I explained this at the time we did it, is remember Zeder is a holding company that owns a bunch of businesses in the food processing industry. And Pioneer Foods is its biggest holding. About 72% of Zeder's market capitalization is comprised of its holding in Pioneer Foods. Now, Pioneer Foods and Zeder obviously have this close relationship, and there's been a very popular pairs trade to do, one which we did unsuccessfully, I'll add, but where you go long of Zeder and short of Pioneer Foods in order to try and capitalize on a narrowing of the discount in the sum of the parts between Zeder and Pioneer Foods particularly. Now, that means that Pioneer Foods has been heavily shorted, and then Zeder is obviously quite a crowded long trade. But the fact that Pioneer Foods is so heavily shorted is interesting. And why I say it's interesting is because the price, there's lots of short interest. It's difficult to borrow scrip in Pioneer Foods at the moment, which is telling you that it's heavily shorted. If there's a crowded short in a stock, then the likelihood is you're going to see a short squeeze at some stage, as all those short position holders have to buy back their position. And we started to see that in Pioneer Foods this week. We've seen that price moving up, and it actually looks to me very much like it's ripe for quite a big short squeeze. Now, if Pioneer Foods does squeeze higher, then the logical thing to think is that Zeder should follow. And that's why I'm relatively content to hold this trade, because I think there's still the potential for Pioneer to squeeze higher and therefore for Zeder to move higher as well. Okay,
well, you talk about logic. I mean, that does sometimes prevail, as does irrationality. Yeah. So, okay, Garth, so those are the two trades that you have entered into recently. I know you want to have a look at the general state of the market now, because we're not putting on any new trades this week, and there's a reason for that.
Yeah, we're not putting on any new trades. We've done okay on the long side over the last week or so, but what's very interesting is look at this graph of the top 40, and we're looking at the bigger picture now. I mean, this rally that we've seen since the 24th of August low to where we are now is actually quite unbelievable. The market's rallied nearly 20% in that time. Yeah. And now look, around about 2,000 to maybe 2,500 points of that rally can be attributed to the deal in SAB Miller. So let's strip that aside. But even if you strip that out, this has been a mammoth rally that we've seen in our market, and it's been driven by the likes of Naspers and Richemont, and look, fairly
but I mean,
broad-based.
a lot of stocks have actually
there has
hit
been
new highs.
There's been a reasonably broad participation in this rally. But some of the resources even have had a fairly nice move up. But where we sit right now is, to have a look, we're basically testing that prior high from April of this year at 49,100. We've been up there, we've tested that level. We do seem to have reversed down from it for now, which is a little bit of a concern. And I think that the market's probably poised for a bit of consolidation. And I think the first level of support that we'd watch is 47,500. And then from there, we'll need to see. But basically what I'm saying is that at this level, I can't justify chasing the market here.
Okay. What about the US markets? Because, of course, we do take our cue from what's happening overseas. They don't seem to have maybe hit quite the point that we have yet.
Yeah, look, this is the S&P 500, and this is the world's biggest equity market index that we all watch. What's quite notable here is that big congestion zone between 2050 and 2135, and you can see that's a congestion zone that basically was evident from February all the way until August on the S&P 500. We broke below that level. Now we've been rallying up again. I would expect that this US market would probably encounter quite a lot of resistance in this sort of zone here. So again, I think chasing the equity market based on this, to me, doesn't seem like a very prudent thing to do. To me, that is probably set up, poised for a period of consolidation, and then we'll take it from there and see how things look.
And when you talk about consolidation, do you mean actually a retracement or maybe just flatlining? And of course, you would benefit if there were a fall in the market because you have an option against the market weakening.
Yeah, we do have an option structure on the top 40, which would only come into play if our top 40 went below 46,000. So now that's quite a long way away. I'm beginning to doubt whether that structure is going to play out for us now. But nevertheless, we've got it in place, and it's kind of an insurance policy against market weakness, if you like. In terms of consolidation, it could be just that the market flatlines and kind of catches its breath for a little while, or maybe it's a retracement. I don't really know. We'll need to monitor it and see. But I think whichever way you slice and dice that, to me, chasing this market at these lofty levels doesn't seem like a particularly fruitful strategy. So on that basis, I'm kind of standing back. We've taken a little bit of money off the table this week with our BHP Billiton long. We've still got the Zeder trade on, but other than that, I'm relatively content with where we're positioned at the moment. And then if this market does begin to consolidate, maybe it lines up another opportunity for us to buy. But we'll have to monitor that week by week and see it as it plays out.
Yeah, but patience, I think, is the key word here. Garth, so then what does the portfolio look like, having had a nice little sweetener from BHP Billiton?
Yeah, it's looking good, actually. We're at a new high for the year. We're up 45%, so 362,000 Rand is what's in our portfolio. Those are the trades that are open or have been open this week. We've still got our option structure on the December Aussie futures. Zeder, we're still long, and we're up 8,300 Rand there. And then the BHP Billiton, we've made 9,580 Rand there. So all in all, it's looking pretty healthy, and I'm happy with where we're standing.
I mean, actually, you've sort of downplayed the Zeder profit that you're making. That's not too shabby at all.
It's a very decent little profit. That is about 2.5% of capital.
Okay.
But if the price of Zeder does move up into that 8.50 zone that I'm looking at, then we should make nearly double the profit that we've got sitting there right now.
Okay. Garth, so then just to end off with your next courses, and I guess they are the last courses of the year.
Yeah, so these are the courses we're running in November. In Cape Town on the 7th of November, I'm doing a high probability trading course. Then in Johannesburg, I'm doing a high probability trading course on the 14th of November, and my colleague Andrew Todds runs a top 40 trading course, and he's running that in Johannesburg on the 7th of November. So anyone that would like to attend any of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the information.
Okay, great. We'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.